Afternoon, everyone, and warm welcome to the second meeting for the corporate tax return. Today is the second day, and in our day one, we have covered four parts A, B, C, D. Today we are planning to cover F, G, H, I. Some of the members has called us and requested to stay for 2 minutes, but as usual, since we have a full pack of data, so we will not be able to hold. So let me introduce briefly about Majlis series. We are planning to have two Majlis on the information of the corporate tax return. So we already covered four parts. We will be covering four parts. Then after we are planning to have four more meetings. After the Majlis one, many of our regular member of the Majlis call me up. They appreciated the details as per them that they got more information, they were more happy than physically attending such sections. 1 minute, I need to admit. I will request my co-organizer to admit wherever the people are coming so that I can focus on the PPT. All right. So that way, yes, webinars are more nowadays. Webinars are more effective because it will save your significant time. You will not require all the way to go to do physical. At the same time, webinar gave you the opportunity to take the screenshot, to record, to repeat again. So that way, yes, nowadays webinars are more effective to save the time, but nevertheless, physical meetings are yet effective if you think that you will not be able to focus on the such webinars. Number one. Number two, a lot of members has requested to go deep into the every part. As I have mentioned in the first meeting, first Majlis, that if we will start touching the articles and provisions, then we will not be able to complete in two meetings. We wanted to complete in two Majlis all the 8 parts, and then one part, one Majlis we have devoted. As we know that recently in the month of November, FTA has come up with the 176 pages of the guide. So a lot of my friends, they told me that corporate tax return is very simple. There is nothing we can file. Yes, it is very simple if you are going for a small business relief or if you have recently started a business. The real returns will be getting filed at 30th September 2025 because all those regular and bigger businesses, they will be having a deadline on 30th September. Whatever return we file on 31st December, those return were for the new entity or entities which re-domiciled to the UAE recently. So there were no much of detail. Otherwise, as many as 20 schedules are within the corporate tax return. Each schedule can run into 10 to 20 pages. I know some of the complex businesses where they may end up filing 200 pages corporate tax return. So it's all depend how many aspects are there in your corporate tax return. If you require to file all the 20 schedule, if you are subjected to all 20 schedules of the corporate tax, then it will be very lengthy. At the same time, this all depend what kind of selections you have adopted. Suppose you go for a say regular taxpayer in case of the free zone and you opt for the 9% corporate tax, then of course you will not require to fill the free zone schedule, which is very lengthy, whereby you have to give and demonstrate compliance of the all condition of Article 18. At the same time, you need to give the details about uh, Ministerial Decision 100, whereby you have to give the details about your substance, adequate substance, employee, full-time employees. at the same time, you have to give the details about your qualifying activities. So whenever you have such kind of complex avenue, then the return will be very lengthy. It may take you 1 or 2 days to file the return. We always advise that first you have to do the walkthrough to the all the parts, keep the all information ready before starting of the return, because many a time you cannot, many a time you save the return and it disappears. So better to do the walkthrough, do the groundwork before starting the filing the return. And this special instruction is for the tax consultant, as I know that many of you guys are into the consultancy of the corporate tax and return filing. So better to have a physical data ready before starting the filling the corporate tax return. Now, just to take you through what we completed in the Majlis number 1, we did the overview of the corporate tax return, whereby we said that it need to be filed within a 9 month from the end of your tax period. So most of the businesses, the next deadline will be 31st March 2025. Very few they will be having a deadline on the January ending or February ending. But there are many businesses whose financial year ended on a 30th June 2024. The deadline will be 31st March 2025. Those are the specific deadline, like the March ending or June ending or September ending or December. There may be a businesses they end their financial year in between the months. So now before filing the corporate tax return, you need to discharge the corporate tax liability. You have to file the return along with your corporate tax return. Then we discuss about all the parameters, key attributes of the corporate tax return. What documents required, we discussed in the Majlis number 1. This was the first screenshot from the corporate tax return. As we all know, there are 8 parts. Each part has separate section to fill. So taxpayers detail, free zone detail, elections, accounting schedules, accounting adjustment and exempt income, other adjustment, tax liability and tax credit, review and declaration before submitting your corporate tax return. Then we discussed that part A consists of taxable person information, which will be pre-populated. All the 6 items will be pre-populated based on the information given at the time of registration for the corporate tax or at the time of registration of the VAT. So as we know that while doing the corporate tax registration, certain informations are pre-populated from the VAT registration. And we discussed that if you have selected a resident person for a non-resident at the time of doing registration for the VAT, though resident, non-resident was not so important, especially for the foreign branches, now you have to go back and change on the portal, make it a non-resident if you are a non-resident, because that will have a different implication under the UAE corporate tax law. Then we discuss about what other information, what additional information, in addition to whatever is pre-populated, required in case of the natural person, in case of the juridical person, and in case of the free zone person. Then this was the second screenshot, whereby what additional information required in case of the free zone, as we already discussed that what additional information required for the free zone person. Then we discussed the elections. We have discussed that there are certain elections you have to make while filing the corporate tax return. Based on those elections, further information will be populated. So it is very important to make the right elections. Certain elections only you can make at the first filing of the corporate tax, and it will have a repercussion in a coming tax period as well. Certain elections are irrevocable. It means once you make the election, it will continue for the further tax period. Then the part C, accounting schedules. We know that it's a part of the financial statement whereby you have to file accounting, income statement, comprehensive income, balance sheet. So this was the screenshot statement of the profit and loss account, statement of the other comprehensive income, then statement of the financial position, detail of the assets, detail of the liabilities, and one very important part was the audit, whereby if your opinion is other than the qualified opinion, then you may have it may trigger a further information. Then this was the information we discussed. I'm just running through, and the recording of the Majlis number 1 is available on the YouTube and our website, so you can watch if some this I'm running through for the new members so that they can be aware that what we completed in Majlis number 1, which was Majlis number 12, day 1. This is the part D, accounting adjustment and exempt income. The screenshot, accounting income, then transitional adjustment, exempt income. This was the information. Now, today we will be covering the 4 parts, okay? And then from the next Majlis, on every part, we will be deep dive, as I said, that as many as 176 pages within the guide. It means there is a lot of information to discuss, and we will be aligning every Majlis to the corporate tax return guide duly issued by the FTA. So let's start with the relief. This is the part E, the 5th part. We will be discussing 2 reliefs. One relief, first relief is the transfer within the qualifying group. Now, in case when you have elected to get a benefit and relief for the asset or liability transfer within the qualifying group, then you need to give a further information by way of the schedules. As I said, that as many as 20 schedules are part of corporate tax return. Out of these, 2 schedules related to the relief. Now, what information required? We will be going into the deep. We are just touching, even to touch every part is also very difficult to cover in 2 hours of the 2 Majlis, because it's very lengthy. So we will not be going deeper, but we will be touching every aspect of the every part, and then we will be going into the depth. Now, relief transfer within the qualifying group, the transferor. So what transferor need to compile in the schedule, which need to be filed along with the corporate tax return. Disclosure about the gain and loss. So when the asset or liability is transferred within the qualifying group and you have elected for the relief, then you need to make the disclosure about the gain and loss into the schedule. This will be applicable where you need to make the such a disclosure transfer within the qualifying group schedule. This is the one of the 20 schedule. One schedule is transfer within the qualifying group schedule. Now, this applicable only. See, if you have not make the election, you will require to do nothing. If it is not clawback, suppose you made the election and you have violated the condition of the relief, then, and if such situation is not there, you will not require to report anything. This transfer within the qualifying group schedule need to be completed if you have made the election or there is a clawback. It means you have violated any condition of the relief. In that case, you need to give the details in the schedule and file along with your corporate tax return. So this was in case of transferor. Now, in case of transferee, again here you need to make the disclosure of adjustment. What kind of adjustment? There are many adjustments. We will be having a separate majlis on the same. Now, received asset or liability on which relief is claimed. Now, this need to be disclosed within the qualifying group schedule. So, what you need to disclose? What asset or liability you received and relief you claim. Now, what relief? See, if you are transferring the asset within the qualifying group, whereby the shareholding is to the extent of 75%, it means you are putting a asset from one pocket to another pocket. So there will not be any gain or loss on such transfer. If you satisfy the conditions provided under the this particular relief. So what happened? If there is no clawback, you will not require to give any information. If there is a clawback in case of the transferee, it means you have violated any condition and now relief is not available to you, or you received any asset or liability on which relief is claimed. Those information required to give into the qualifying group schedule. So now, in short, if we summarize from this, though it is bit complicated, we try to make it as much as simple possible so that you can understand that what information you require to give. Suppose during the year you have transfer within the qualifying group, irrespective whether you are transferor or transferee, there are certain information you need to provide to the tax authority through the transfer within the qualifying group schedule. Once you select that particular election, then automatically those information will be populated inside the corporate tax return. Same thing in case of business restructuring relief. In that case, in case of the transferor, same thing, you can see the same schedule disclosure about the gain or loss in case of business restructuring relief. If you have made the election, then there is a particular schedule called business restructuring relief schedule, and you need to, in case of you have not made the election, it means you are ready to pay the tax on the gain, or you have claimed the loss, then you will not require to give any information, because here you are not claiming any relief. If you have made the election to claim the relief, or your relief is uh, cancelled due to violation of the information, then such information need to be given into the business restructuring relief schedule along with the corporate tax return. In case of transferee, again, here you need to give the information in respect of the disclosure of the adjustment, and you also need to give the information in respect of the whatever business or part of business on which relief is claimed. So those business or part of business separately you have to give the detail inside the business restructuring relief schedule. Or if you have claimed the relief and those conditions are violated, then also you have to give the information in the business restructuring relief, because if you are not satisfied the information, then those whatever relief you claim in previous year, now it will become a taxable. But if there is no clawback, then you will not require to give any information. So this is the two schedules which is part of the corporate tax return. This is two schedule out of the 20 schedules. We have a separate part in which all the schedules we have discussed. Now we will move to the part F, other adjustment. What other adjustment you need to make to arrive at the taxable income. As we know that there is a set journey from the published profit to the taxable income. So in between there are certain allowances, there are certain disallowances which you need to deduct or add back to arrive at a taxable income. This is the screenshot. Other adjustment, you can see the other adjustment for non-deductible expenses. Certain expenses are not deductible. We have a separate slide on that. Those information for those expenses need to be given separately. Adjustment for the interest, income, and expenses. So as we know that there is a general and a specific rule, limitation rule for the interest expenses, those informations we have a separate schedule. Those information need to be given in the separate schedule. Then adjustment for the income and expenses derived from a qualifying investment fund. Then other adjustment. Now we will be touching upon some of the part. We will not be deep dive. As I said that every part will have a separate majlis. So let's see the other adjustment. First is the non-deductible expenses. Some of the expenses we have given a detail over here. First is the entertainment expenses not eligible for deduction. As we know that under Article 32, certain expenses are allowed, certain entertainment expenses are allowed to the extent of 50%. So any entertainment expenses incurred for the staff will be allowed for 100%. Rest all expenses, entertainment expenses will be allowed to the extent of 50%. So here you have to give the details of the total expenses and how much related to the staff, how much are entertainment expenses subject to the 50% rule. Then second is the pension contribution not deductible. As we know that there is a separate article on the same, we will be discussing in depth in the separate majlis, because even if you touch upon all, then also it will not be able, we will not be able to complete in 1 hour. So we have not put much information on the every expenses, but we will be discussing in grade. So here we are discussing the corporate tax return and not the corporate tax articles. We have a separate majlis where we have discussed on the article. So we will not be discussing the provision here. Charitable donations, as we know that any donation made to qualifying public benefit entity is deductible. Rest all donation made is not deductible. So this information you have to provide. Then expenses related to exempt income. As we know that if you incur any expenses to derive the income which itself is exempt, then those expenses but natural will not be allowable as a tax deductible expenses. Then the fifth one is the expenses not wholly or exclusively for the business. As we know that corporate tax law provide that expenses incurred for the business purpose will be allowed as a tax deductible expenses. So what happens if you have within your profit and loss account certain expenses in the personal nature or certain expenses which is not specifically related to your business, those expenses you need to add back to your publish the profit or profit as per the profit and loss account. Then the sixth, dividend, profit distribution or similar benefit paid to the owner of the taxable entity. As we know that any profit distribution is always below the line. It means once you pay the tax, then those profits are available to distribute to the shareholders or owners of the businesses. So if you made such a distribution, whether by way of the drawing or loan or in any way, those will not be allowed out of your profit. You have to pay the tax on the same, and then it is eligible for the distribution to the owners and shareholder or partners. Then the last one is any other expenses that are not deductible. There are list of the other expenses like the bribe or the gift which is in the nature of the bribe, those or commission or agency commission or anything which is not in the in the right format, which is more towards more towards like a uh, gift or non-business related, those expenses will not be allowed. Then interest expenses will move to the second interest expenditure general or a specific interest limitation rule need to be tested. So as we know that one is the general interest expenses rule whereby up to 12 million full interest expenses are allowed. More than 12 million, there is a one specific rule whereby 30% of uh, earning before the tax and interest. Only to that extent interest is allowed. Rest will be subject to the carry forward. And any interest to the loan to or from the related party, again, that has some specific provision under the UAE Corporate Tax Law. So we will be discussing in detail because it has a separate schedule, but we are just touching upon this provision at present. If net interest expenses exceed 12 million, it will be subject to the interest capping rule, as we discussed. If net interest expenses does not exceed 12 million, then it is fully deductible. Carry forward interest will be subject to the capping rule as well. So even now you have a carry forward interest, and if it is more than 12 million, again it will be allowed up to the 12 million. So what disclosure required? Disclosure disallowed net interest expenses you have to disclose separately. Then deduction of the carry forward of the interest expenses from the previous year. So this has a separate schedule. In the schedule, you have to give the details about interest. The next is the tax liability and tax credit. As we know that once we reach to the taxable income, then you have to pay 9% tax on the total taxable income. Now, out of this taxable income, there are certain credit. Suppose you have a foreign tax credit. At present, there is no withholding tax. But in future, if you have a withholding tax, those credits are available. So let's check the screenshot and then we will discuss in the same. This is the screenshot for the tax liability and tax credit. If you look, it starts with the taxable income, and then there is a certain adjustment to the taxable income. If there is any tax losses, those need to be adjusted against taxable income. And then tax calculation and tax credit. So system will automatically calculate as long as you punch the figures, system will be calculating the tax, and system will be asking for the is there any tax credit in by way of the foreign tax credit or any other way. Once you will punch, you will require to submit the document in respect of the same. And then you can see we have highlighted estimated or provisional figure included in the city return. And then you have to give the additional attachment. Attachment we have discussed in the last, like a financial statement, then the auditor's report in case if you are a qualified free zone person or your revenue is more than 50 million. In respect of the transfer pricing, you have to submit if you are subject to the local file or master file or disclosure form. So basically, this is the one page for the taxable income. Once you feed the information, other information will be populated. Now here we can see what you need to give the detail about the tax liability and tax credit. Tax rate 9% on taxable income exceeding AED is 375,000. As we know that up to 375,000 you will not require to pay any corporate tax. Large multinationals companies that meet the criteria under Pillar 2 tax model of OECD BEPS would have a different tax rate. As we know that we already come up with the Pillar 2 requirement whereby you have to pay top-up tax of 6% in addition to 9%. The aspect number 2, tax losses, tax group tax losses. If there are any adjustment in respect of tax losses, in that case, tax loss schedule and group tax loss schedule need to be completed. So by this way, you can see total are 20 schedules to be submitted along with the return. We saw at the time of relief 2 schedules, at the time of other adjustment, we saw the interest schedules. Here we can see the 2 more schedules. This way, if we start filling, if there is a businesses, if they will require to fill all 20 schedule, then it will be a very complex and very lengthy corporate tax return. So here you can notice there are two schedules where you have to provide information along with the corporate tax return. Then the aspect number 3, corporate tax need shall be calculated after tax losses, group tax losses adjustment. As we already discussed at the screenshot that after the taxable income, there is adjustment for the tax losses in case of you are filing the corporate tax return for the group, then there will be a group tax losses adjustment. And then the last, if there is any eligible tax credit and tax credit schedule is completed, amount will be pre-populated for the tax credit. So here one more schedule, which is the tax credit schedule. And if you entire return is all based on the selection. So once you select particular schedule or aspect, automatically information will be populated. So it is very critical, very important to understand what sort of selection you need to make. Many a time, if there is an important information and you have not selected that particular aspect, you may end up missing providing the adequate information triggering the tax audit. Many people, they told me that 8 parts and only 1 page for each part. No. Each part has a certain selection to be made. Once you click that selection, then automatically it will give you the more aspect and information required to file the corporate tax return. Now, last to last, review and declaration. This part is very important. Before filing the corporate tax return, it is advisable to take the PDF copy, review every section, whatever information you have filed, get a signature of the client if you are a consultant before filing the corporate tax return. It is very important to avoid the future problem to get a signature of the client explaining every aspect, what information you are providing to the Federal Tax Authority. So this is the screenshot for the review and declaration. Step 1, taxpayer detail. Step 2, free zone details. Step 3, elections. Step 4, accounting schedules. So you can see all the 8 parts. Information is there. You can expand the same, what information you provided, you can get. And then at the end, there is a declaration. You have to check box to confirm the details before submitting the same. So here is the information what you require to provide it in that particular part of the corporate tax return. First, indicate the authority for filing the corporate tax return. As we know, we have seen, we have discussed in the Majlis number 12, last Majlis, that is the taxpayer or tax agent or any legal representative of the taxpayer can file the return. But in that case, you should have a POA, power of attorney, to file the tax return. So the business itself can file the tax return in-house, or you can have a tax agent. As we know that there are certain agent registered with the Federal Tax Authority, we call them a tax agent, or any consultant. But in that case, you should have a POA to give you the authority to file the corporate tax return. If the authority is other than the taxpayer, provide confirmation of the grant of authority. So when you are filing the return on behalf of the client or business, please tick that box stating that I have authority to file the corporate tax return on behalf of XYZ. Then the third, acknowledgement of accurate and complete information in the return, including the name and role of the taxpayer, tax agent, or consultant. Now, this is also very important that you have acknowledged. Tomorrow, if something go wrong, then the taxpayer will not be responsible. But if you have, like you are a tax agent or a consultant, okay, and you have given the information and you made the declaration that all the information are accurate and complete, then you will be responsible for the filing the tax return on behalf of the taxpayer if something go wrong or if the information was not provided adequately. Then last, you need to give the date of filing the corporate tax return. So the corporate tax return can be filed anytime after the close of the tax period within a 9 months. It's not that on a last date or last month you have to file the return. Anytime, like your say your tax period end on 31st December 2024. So on a 1st January, you can file your corporate tax return as long as your information is available and you pay the tax liabilities, corporate tax liabilities, you can file the tax return, and you have to give the date on which you are submitting your corporate tax return. Now, throughout the Majlis, we have discussed about the schedules. We have a 20 schedules, 20 schedules. This is the list of the 20 schedules. And again, I'm repeating the same because when guide came with the 176 pages, all of us were wondering that what 176 pages for the corporate tax return. So then we understand that it's very lengthy. It's not a few pages. It's very lengthy. And every aspect has a separate schedule. Like for free zone schedule, we already discussed in the last meeting, whereby you have to give the information of all the compliance required under the Article 18, the 5 conditions plus 2 conditions, you have to demonstrate. Then, suppose for the adequate substance, you have to provide all the information to demonstrate that you have adequate substance, including the full-time employees. So one schedule itself is a one corporate tax return. If you have such a complex information for that particular schedule, small companies, which is either for the small business relief will not required to provide all those informations, or when you are a straightforward LLC companies, whereby you don't have much of complex within your balance sheet and income statement, may not require to give and submit all those 20 schedules. So free zone schedules, we discussed, we are reading from left side, the free zone income from intellectual property, again separately, as we know that there is a certain provision which provide exempt and non the income which is not taxable if it is a free zone, and in such income is from IP. Then the UE dividend schedule. We know that domestic dividend is not taxable under the corporate tax law, but you have to provide all the information what kind of dividend you received, when you received, whether it was declared and paid by the company. There is specified information in that particular schedule. Then why this is required? Because dividend is after payment of the corporate tax. So it shouldn't happen that you receive the money before paying the corporate tax. So that dividend is not eligible as a deductible expenses. We discussed while ago. So accordingly, you have to give information over here to match in your income statement that dividend is not claimed or profit distribution is not claimed as a expenses. Then the next schedule is the related party transaction schedule. We have discussed separately, so we wrote over here that we have separately discussed in a subsequent slides. Then connected person schedule, again discussed separately. Tax credit schedule we discussed while ago in last slide. Participation exemption schedule we discussed in the first Majlis, whereby if you have a serious shareholding or investment 5% or more or 4 million, then you get a certain benefit like those dividend and capital gain will not be taxable under the corporate tax, but you have to provide all the information of such investment in this particular schedule. Then the foreign PE schedule, whereby all in this jurisdiction, when you have a PE outside the UAE jurisdiction and you have claim the exemption from the corporate tax, you have to provide the information in this particular schedule. Then tax losses schedule. In last slides, we discussed tax losses schedule and tax group losses schedule while calculating taxable income. Then we move to the right side interest capping schedule. We discussed while ago. Then the transfer within the qualifying group schedule, business restructuring relief schedules. This also we discuss under the relief. Then the transitional rule qualifying immovable property schedule. As we know that you have given a liberty to value your immovable property on a first day of the tax period, either by selecting the holding period or by selecting the value, market value as on the first day of the tax period. So all those informations will require to be given, and such election need to be made in a first tax period. Those elections will be irrevocable, so you cannot revoke subsequently. Then the next is transitional rule, again qualifying intangible asset schedule, same like qualifying immovable property. Then the third schedule is the transitional rules. Under the transitional rules is financial asset and financial liability schedule. This also we discussed in the last Majlis, whereby there is a historical cost basis or realization basis. When you are electing a particular aspect, you have to give all the information in this particular schedule. Then the income and losses which will not subsequently be reported in the income statement schedule. If you are reported certain income and losses under the comprehensive income schedule, those need to be given information regarding the same need to be given separately in this particular schedule. Unrealized gain and losses schedule, deferred gain and losses schedule, and attachment schedule. In the attachment schedules, as we read some time ago, that master file, local file, all those information, whatever schedules, whatever reports you have attached, everything need to be listed down under this setting. So these all are the schedules which is part of the corporate tax return. So let's move to the part last part, which is the transfer pricing disclosure form. Now this is very important. We have a 15 minutes. We are expecting to complete the last part, but this is very important schedule to be completed before filing the corporate tax return. As we know, there are three articles, Article 34, which require all the businesses to follow the arm's length principle. Article 35, which define who also will be regarded as a related parties. And Article 36, which specifies certain payment made and benefit extended to the connected person need to be reported separately. So we discuss all these three along with in perspective of the transfer pricing regulation and compliance. Now here under the corporate tax return, you have to provide certain information in a separate schedule. One is the related party transaction schedule and connected person schedule. So first let's look at the related party transaction schedule. After performing KYR and KYT, KYR is know your related party. As in the Majlis 1 we highlighted, the related party under ISA 24 is altogether different than the related party defined under Article 35. Fourth level of kinship will never be part of the related party under the International Financial Reporting Standard, but corporate tax has bring this concept whereby if some businesses are owned by the fourth level of kinship, and if your business is doing transaction with them, those will be regarded as a related party transaction. Once the same is designated as a related party transaction, then you have to follow the arm's length principle and fair market value. So what happened? Those all transactions need to be at arm's length. Here, after performing KYR, know your related party, you have to identify. Once you identify these are your related party, then you need to identify, know your TS, transaction, know your transactions. So with the related party. So ultimately your aim is to perform KYR to identify your transaction with related party. You need to report RP, related party transaction, in a related party transaction schedule if such transaction aggregate value of RPT is recorded in financial statement or at market value exceeding 40 million. So now what will be subject, as we know that here we have a businesses and they are mostly within the group. Suppose a company which has 100 companies, a group which has 100 companies and they are doing transaction, intercompany transactions, then if you start reporting all the transactions in the schedule, then maybe schedule itself will run into the 100 or 200 pages, making it very difficult for the tax authority to understand the magnitude of such related party transaction. So due to this, Federal Tax Authority has come up with a threshold specifying if your related party transaction put together all in aggregate is more than 40 million, those transactions need to be reported into the related party transaction schedule. Plus, one more threshold, if individual transaction, any transaction individually, if it is of 4 million or more, then more than 4 million, then such transactions need to be reported under the related party transaction schedule. So if aggregate put together or related party more than 40 million, if a single transaction more than 4 million, those will be subject to the reporting in the related party transaction schedule. So this was for the related party transaction. Now, this is the threshold to disclose such transaction. But arm's length principle is applicable for all the transactions. As we know that certain jurisdiction has a certain threshold to follow the arm's length, whereas here until today, the arm's length principle need to be followed for the all transactions irrespective of amount of such transaction. And we know that to reach at arm's length, we need to do the benchmarking. We need to perform the functional analysis to select the right method, transfer pricing method, and do the benchmarking on the external database. So this was related to the related party transaction schedule. Let's move to the connected persons schedule. After performing KYC, again, know your connected person. Up we had a KYR, know your related party. Here, KYC, know your connected person, and KYT, know your transaction with the connected person or payment made or benefit extended to the connected person. You need to report connected person transaction in the connected person transaction schedule if such transaction aggregate value of at least one connected person transaction, including their related party, exceed 5 million, exceed 500,000, half a million. Now, here it is very important to understand it's not only connected person. Any payment made or benefit extended to related party of such connected person. Now, related party, again, the definition of 35 will be applicable. So, those also will be regarded as a connected person. And if you aggregate all the value or benefit extended to all this party, and if it is more than half a million, 500,000, those transactions will be subject to be separately reported under the connected person schedule. It means even if you have any payment made to connected person or benefit extended to connected person less than 500,000, yet you have to follow the arm's length principle. So those transactions value need to be at a fair market value. Any payment or benefit exceeding half a million per connected person together with its related party must be disclosed, as we discussed. So this is the two threshold for a related party and connected person prescribed. Now, related party, we can discuss what detail required in related party transaction and connected person schedule. All that here we are saying that such transaction will be part of related party transaction schedule or connected person schedule. Once those transactions become subject to reporting under this particular schedules, then what information required? Second question come, what information I need to give? Just the name of the party and transaction value? No. You can see how much more information will require to be given for each transaction. RPT schedule, related party transaction schedule. You have to give a name of the related party, transaction type, purchase, sale, expenses, or whatever nature of the transaction you have to provide along with the proper description. Then tax residency, whether the related party is tax resident or tax non-resident. Corporate tax, if it is a tax resident, then the corporate tax TRN or TIN, if available. Many a time the particular person is not subject to the corporate tax, like in case of natural person, your income is less than 1 million, then you may not be having a TRN. Then the gross revenue and expenses, transfer pricing method applied, because now those transactions need to be at a fair market value at arm's length. So you have to select the transfer pricing method. that need to be disclosed in this schedule. Description of other transfer pricing method applied. Many a time, as we know that corporate tax has prescribed the 5 method and given option by way of 6 method that you can follow any method which is most appropriate for your particular transaction. If you have adopted that 6 method, you need to give the information about that particular 6 arm's length value of the transaction. So you know the transaction was say 500,000, but arm's length value is 600,000. You have to give the detail of the 600,000, how you arrived, and on a full basis, you may require to give the transfer pricing report to the Federal Tax Authority if asked. Then, once you have a transaction value, once you have an arm's length value, then tax adjustment. The system will automatically calculate a tax adjustment in this case if the arm's length value was, say, 500,000, 500,000, and transaction value was 600,000. So 100,000 will be disallowed, and this will be added in your taxable income. So tax adjustment in case of the arm's length value is other than transaction value, system will calculate the same. If the arm's length value is less, then of course there will not be any adjustment. Let's move to the CP schedule. In case of, we know that connected person, if your value is more than 500,000, then you have to give the name of the connected person, corporate tax TRN or TIN if it is available, payment made or benefit extended to connected person. So here again you have to give the nature of the payment made and benefit extended. Total description about that particular transaction. Then description of the services provided by connected person to the taxpayer. Suppose he is a CEO, then you may require to give the job description. Then the market value of the payment made or benefit extended to connected person. So first is the transaction value. Suppose you are paying manager remuneration, say 1 million. And then when you do the benchmark functional analysis and benchmarking, you got say 800,000. So then you have to give the market value and you have to give the detail how you derive the market value of the payment made or benefit extended to connected person or any related party of the connected person if it breached the threshold, and then tax adjustment in case arm's length value is other than the transaction value, and if it is less, then of course there will be addition in your taxable income and accordingly you have to pay the tax. So this is the two very detailed schedule, and threshold in case of the bigger company is very small, 500,000 and 40 million is nothing. And all the transactions, as we know that now the dynamic groups, they have all the transactions within the group. So all those details will require, every single transaction will require this much details to be given under the schedules. Then now we saw the transactions with related party, connected person, what method we need to follow, what will happen, then what kind of information we will give. Based on this, we have compiled certain key observation and consideration in respect of the connected person and related party. So what considerations you need to taken care of? Perform three-way test for alignment of a TP disclosure form or local file as the case may be, and is matched with the financial statement and corporate tax return. So it shouldn't happen that in TP disclosure form, say you are saying 500,000. Financial statement you are saying, say 550,000. Corporate tax return you are saying something different. So you have to perform the three-way alignment test on your transaction It's a 4 o'clock. We'll be taking a 5 minutes more to conclude. This is the last section, last part. Then the ensure transaction exceeding the threshold are categorized. So you have to give a proper nature of the transaction, like whether it is a goods or service, or whether it is interest on the related party loan, or any nature of your transactions. So mostly it will be a good service or interest, but you may have a different nature. Those information you need to give properly with a proper supporting document in place. So when you give the information tomorrow, Federal Tax Authority come up and ask you the supporting documents. And this tomorrow can be a 1 year, 2 years, or 5 years. So while creating this nature, you should create a document and keep it in a safe place, aligning with your transaction and corporate tax return. Because tax audit will not come immediately. And at the time of tax audit, you may not have the same person within the group or within your company. So it will be very difficult. And it is very difficult to prepare the document after, say, 1 year, 2 year, or 3 years, or any time. So it is advisable while filing the corporate tax return, all the documents need to be created and in a separate folder. It should be saved, thinking that tomorrow tax audit come, then you can provide all the information, and all the information is available readily. Then the third, ensure all downward adjustment to taxable income are justified, documented, and submitted for FTA approval. So downwards adjustment are allowed only if the FTA approves such adjustment. Then the next is FTA expect all transactions to meet the arm's length test. Even if transactions do not meet the threshold, local file and master file requirement may still apply. So as throughout the discussion of the related party, we were saying that arm's length is irrespective of the value. It is must. Arm's length is not only under the corporate tax. Arm's length required under the value added tax, VAT. Arm's length required under the International Financial Reporting Standard also. So now the arm's length value will be the way of life. Whether you do the transaction with the dependent person or independent person, dependent party or independent party, your value should be arm's length. It means the same rate you need to charge, same pricing policy you need to adopt irrespective of the transaction are with the related party or unrelated party. Next is the furthermore, taxpayers should not rely solely on the financial statement to determine the threshold. For example, in case of the loan, whether interest accrued during the year need to be added to calculate the threshold. Now, this is also very important that when you look at your balance sheet and you or your financial statement, you come up with some threshold which is not crossing the say 40 million or half a million. But then you have to see entire year what transaction, what additional transaction which is already square up. The next is the loan. The low threshold for the CP require most companies to disclose them. Reporting adjustment for all payment or benefit even below half a million. You know that half a million is very low threshold. For any managerial remuneration, it will not be reaching, say it's almost less than even 45,000 per month, which is the salary of nowadays officers. It means all the connected person, all those owners, CEOs, salary, MD salary will require a separate schedule to be reported separately. Next is the qualified free zone person must confirm compliance with arm's length principle for the related party transaction and ensure IP doc. This we know that if you are going for a qualified free zone status, there is a separate condition of under the Article 18, whereby you need to give the declaration that you are following the transfer pricing regulation, and arm's length is the must for the transfer pricing compliance. Next is no clarification in respect of the related party within the member of tax group. So though we know that within a tax group, if members are doing the transaction, it will be eliminated at a consolidation or combination. But there is no clarification whether during the year, if you do the transaction, such transaction need to follow arm's length or not. Our view is that you should follow the arm's length principle for all the transactions, irrespective whether it is within the member of the tax group or with the dependent party or independent. So that will bring us at the end of the disclosure from a related party, and at the end of the Majlis number 13, day 2. Now we will be jumping into the every single part. Either we take a 1 week break, or maybe from the next week our team will give you information. Better to join the corporate tax Majlis group, WhatsApp group, whereby you will getting the all information. Plus, we are planning to discuss on every Majlis. Like today, we have a Majlis number 13. Suppose you have any discussion. Now we have somewhere around 120 members. So you can discuss among yourself, because it's a Majlis concept. It is not a lecture. It is not as the speaker or this concept we don't have is some Majlis concept. At present, we are discussing since these new things are coming from that Federal Tax Authority, but we adopted this concept. Going forward, there will be a core domain of the tax people who will come join the Majlis. At present, online, maybe in physically in future, where you can have a tea in hand and you can discuss about the provision, because now law is already stabilized. All the publication announcement is already made, because you already filed the corporate tax return on 31st December. So now law will not change. So there will not be any more new things. Of course, amendment will continue as long as tax laws are there. Amendment will be continued, but there will not be a separate provisions for the same items. Whatever same items, same articles, same complex things. Law settled, because they cannot change law. People already filed their corporate tax return. Now same provisions need to be discussed, understand in the right spirit. For that guidance note you can expect, though all the guides may be running in more than 1,500 pages or 2,000 pages are already there. So all the aspects are, most of the aspects are clarified except one or two. So there will not be any further announcement or publication from the Federal Tax Authority on the same concept. It means now the matter become subject to discuss and deliberation rather than seminar and webinars. So now there will not be no need to waste the days of joining any seminars. Now, same aspect, on every aspect, we already had a many webinar, whether it is free zone, more than 10 we had. Now it will be a discussion and deliberation on a particular scenario, specific things, which can be addressed through the majlises, what concept we are running, whereby all the expert as well as industry leader will come. They will discuss their specific requirement, get right opinions where the specific provisions are not available within the group. So for this purpose, you can join the WhatsApp group. We have last time we shared the link again. If you have given your number while doing registration, so our admin person will add you, and there you can discuss about this, about every aspect of the corporate tax return. Since we are running the Majlis for corporate tax, going forward we will be touching every single article of the corporate tax, every decision. At a time you can have a more question or discussion and deliberation. We all are expert now, since law is almost more than 2 years. 9th December 2022 law was published. Is almost more than 2 years. So now we can discuss on every aspect. At the same time, to educate the people, we are running the corporate tax master course, specifically designed for those people who want to be in a tax domain, whether with the industry or as a consultant. And as our approach of the Majlis suggests, we are not formal, we are very factual, to the point, and we are driven by the articles and commentary of the law. We don't go beyond that. And we add our 17 years experience on this part of the world, and we see every article and implication in light of our experience of the bigger businesses over here. So very soon they will be announcing the date, and we will be giving more detail on the corporate tax Majlis group. So thank you very much for joining both the Majlises. For the next Majlis, please be the part of the corporate tax Majlis group, and we will be announcing the dates and subject. And your feedback is most welcome. A lot of people, many of the people are permanent member of Majlis group, and they call me up and they told me that you save us in almost a day to visit a certain seminar to understand, whereas in webinar you can spend a 1 hour or 1.5 hour.
Like and subscribe so you do not miss our next video on the corporate tax.